Welcome, everyone, to POV Crypto, the only podcast that both Bitcoiners and Ethereans listen to. I'm David Hoffman, here with my buddy Christian. Christian, how you doing?
Doing good, man. It is a good day. Yeah. How about you?
It's a good day to be in the bull market. Something I was talking to Ryan about recently and some other people is that the cycles go in sinusoid waves, right? It's a cycle. And we're at one point in the cycle, but the cycles aren't like uniform or choppy. Like the time is different. And so like the bull market part of these crypto cycles is very like sharp and pronounced, but overall it's compressed in time. And then those bear markets and all the other things that aren't the bull market actually take up the majority of people's time. So it's probably time to reflect on how we're lucky to be in a bull market. Like there's not that many instances of bull markets and we're in one right now. And so we should all appreciate that because it's going to be over before we know it.
Yeah, for sure. And with that being said, like the bear market does have a lot of benefits, right? Like a lot less noise. That's what the bear market is about. Like the bear market, there's so little noise that all you can do is argue, which is, I mean, some of it can be annoying, but a lot of it like really sharpens your knife and sharpens your arguments and makes you better. Like that's the kind of discourse that for me made Twitter so interesting the last few years. Now it's a very different vibe.
Absolutely. Yeah. What's nice about bear markets is that everyone in the bear market is obviously in it for the long-term game, right? There are long-term players in bear markets by definition, because who else would be in the industry during a bear market other than somebody who knows that they can stick through it for, better times in the future, hence playing long-term games. However, everyone gets to have their first shot at playing the game, and that's what bull markets are all about.
Yeah. I mean, and with that being said, like both you and I got pulled in during a bull market. Most
Yep.
people get pulled into bull markets. The years that, often come up are 2013, 2017. I
Mm-hmm.
think 2021 is going to be a big year for a lot of people and
Yeah.
their first experience with Bitcoin and crypto. So, very exciting, but at the same time, like, how do you go from like thinking about the bear market or not even understanding crypto at all to like now I'm in a Bitcoin bull market and like all of this stuff is happening. So much stuff is happening. So much noise is everywhere.
Mm-hmm. Mm-hmm.
Like how do you
How do
just
I come to
navigate that?
understand
How do you
what's
think?
true?
Yeah, I mean, and like here's the thing, like hardliners who have been in it for a long time, like a lot of them, like they maybe get through the bull market and it's great or whatever, but a lot of them don't maximize what they could have gotten out of it, right? Like there's a
Mm-hmm.
lot of like in terms of like this huge opportunity to make a lot of money, like I feel like there's a very specific type of mentality.
Yeah, I'm reminded of Daniel Kahneman's Thinking Fast and Slow, where he promotes like not being impulsive, basically, right, and like thinking through your decisions and really rationalizing about it. And I guess that's not really like smart advice, like duh. But just I think impulse control and mainly being Zen. I would say the main difference between who I am as a person in 2021 versus 2017 is I've committed more time to practicing like just mindfulness and just being aware of myself. And I think that as a skill is perhaps one of the best features you could bring into a bull market, where by definition, like everything is so emotionally driven. Like when tokens and Bitcoin and Ether are painting all-time high after all-time high, like we said before, and like I've been saying on the Bankless pod, like fundamentals are out and there's only reflexivity. And what reflexivity is mainly emotions, right? And so if your emotions are out of whack, like you're probably not going to make it, fam. Like you got to get your emotions like in a line. You have to make slower trades. You have to be more patient about things. And like I want to bring this up. I'm sure you saw Ivan's Respect the Pump video. Yeah, so it was all about respecting the pump, like letting the pump come into your life. If you see a token pumping that's not yours and you don't have that token, you don't like feel jealousy of that pump. You say like, congratulations to those bag holders, congratulations, you guys got your pump. And if you give out that good vibes, you will get those good vibes in return. Like in turn, you will receive the pump if you are just patient. And I feel like that's like you can either chase the pump or you can have, or you can let the pump come to you. And like that, it's kind of a nice way to like rid yourself of FOMO if you think in that way. Just like, be patient and like accept the pump into your life, and eventually the pump will come to you and give you its blessings.
There's a very easy way to continuously get the pump, and that is just DCA into really good assets. So obviously, I think that is, you should be DCAing into Bitcoin. It's up to you if you want to DCA into Ether or any other crypto thing. But in terms of respecting the pump and minimizing FOMO, building a position, I'm not a trader. Like a lot of traders will say you should ape into stuff. But I mean, unless like it is truly that kind of action, like I just feel like you should make a decision. I like this thing for whatever reason. Hopefully it's has a lot of signs of a quality asset that you want to hold for a long period of time, and you have confidence and conviction in it, and build a position. And before you know it, you feel like you have these positions and these pumps are happening, and you're like, oh, I'm good. I got it. I have a position. You don't even really care about your entry price that much because it was by definition just lower than it is now. So it doesn't matter.
Yeah, no, that's exactly right. I was talking to my sister this morning, and I was telling her I'm writing this like this opening market Monday note for the Bankless newsletter, and I talk about some of these dynamics. But I realized there's something about these crypto markets that are inherently not intuitive to people coming into this space, which is like, I mean, maybe your plan is different, but like I plan on quote unquote trying to sell the top, right? Like I plan on trying to sell the top so that I can buy the bottom. And I'm not saying like 100% of my assets, but like a pretty substantial amount, like probably over 50% of my crypto assets I'll try and sell at the top. And the whole intention of that is so that I can buy more at the bottom. Like if we know these cycles work in cycles, then that seems like a relatively acceptable trade to make. That's rational. And that's something that people aren't ready, or like aren't equipped to understand about, because like people like my sister, which is where this conversation came about, it's like she's like an S&P 401k investor, right? Like time in the market beats timing the market, blah 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 blah. We've all heard it 1,000 times before, but people aren't equipped to like try and actually think of this crypto movement in cycles. Like I remember in 2017, I was like, this is a new paradigm. Like there is no bear market after this. Like this is it into the future. And so I'll never have to sell. And that was a mistake. And so like this time I'm thinking about selling the top to buy back the bottom. And I don't think most retail people aren't equipped to come into this market understanding that strategy.
Yeah, I mean, so this is where I think there needs to be a significant distinction in your bags, at least for me. And to be honest, if your sister is the kind of person that is like DCA into her dollar cost average into her 401k position, which is all highly diversified index funds, she shouldn't fucking touch tokens. She just should not. That's just a fact. She should DCA into Bitcoin, and I mean, she knows you, so DCA into Ethereum too. Like,
my sister isn't interested on buying anything. She just happened to call.
But yeah, so like, but if if someone like her is trying to get into crypto and Bitcoin, like, don't fucking touch any token, because of course she's not going to have the mentality, bandwidth, any of the prerequisites to properly time a market, unless you are literally doing it for her, which is a different situation. So she should just build a position in Bitcoin and Ethereum. I would say never stop DCing. Just literally put whatever amount of money, like imagine a hamburger. Okay, how much does that cost? Or imagine a meal that is like you would easily get that for lunch without flinching. Take that amount, DCA a weekly amount into Bitcoin and Ethereum, and then never stop.
Yeah, see the problem with that.
That is how 99% of people should be dealing with these things.
The problem with that though is like people want to play the token game, right? Like no one wants to come into the world of cryptos and like not play with tokens. Like you're gonna have to scratch that itch somewhere.
Yeah, well, I mean, that's the world is speculating on stuff a lot more right now, because that's the incentive. Like their cash is trash. They see all the volatility and upside in stuff, and everyone, it's so sexy to be a trader, like TikTok investor and all this stuff, like work from home. Yeah. I'm a trader. I'm just going to pick stocks. They go up. I
Trading
cash out.
is just like disgustingly glorified.
It's so glorified right now, and it's the path to being wrecked unless you know what
Mhm.
you're doing. So,
Yeah.
like, for example, David and I would guess a majority of the people that are listening, especially longtime listeners of POV
Yeah.
crypto,
Hmm.
know what they're doing. They've been
Hmm.
here for the bear market. This is a
Right.
bear market podcast. This
Yeah.
podcast didn't exist in a bear market before
Yeah.
this. This is
Retail isn't listening to POV crypto.
straight up. Season 1 is the bear market POV. Season
Mhm.
2, which is right now, episode 3, is bull market POV. So this is season 2, and we are, as a cohort of now longtime crypto holders and
Mhm. Mhm.
participants, are um, you know, we are exploring the bear market, the bull market, and we're going to talk about how to optimize on some of this stuff. But if you're new to this, like, don't hurt your shit. Don't hurt yourself. You're gonna get wrecked. There's a lot of people who know a lot more than you.
One of my friends is making plays into like cross chain tokens. So tokens that are representative of like cross chain assets. So like Ren would be one of these tokens, or like what's the other one? Boring DAO, boring like a boring tunnel, like between two blockchains. So they've specifically made a position into these tokens because of how, on the thesis that like retail just loves cross chain plays and they don't understand like how stupid cross chain plays are as an asset to make an investment in. And so like there are people out there who are speculating just on peak like retail, just like retailness, right? That's to me that's like a pretty
Well,
interesting indication to how fucking stupid some people are who are about to come into this space.
well, before the SEC stopped XRP, like that's the only reason to buy XRP.
Oh yeah, that's 100% true. That's exactly
So
right.
XRP is the token that it just
Mhm.
personifies,
Mhm.
tokenizes, if you will, that exact mentality.
So let's talk about like why tokens have like an intrinsic relationship, and not just tokens, but now tokens. It used to be other L1 assets, but now it's kind of consolidated into tokens. Tokens are the meme for like alt seasons. Like DeFi season is the new alt season because people like tokens. People like investable assets to play with and speculate on and gamble with. And then there's certain amount of cognitive dissonance that people have when they come into this space, where they like don't want to admit to themselves or to others that they missed out on Bitcoin, because we heard about Bitcoin in 2013, and then we all heard about Bitcoin again in 2017, and now it's 2021, and like you still haven't bought any Bitcoin. Like, what the fuck are you doing? You've been hearing about it for like almost a decade now, never actually bought it. Now it's $40,000. Like, what are you going to do? Are you going to finally buy Bitcoin? Or are you going to speculate on a low cap altcoin, like a DeFi token that could like 10,000x? Like, what are you going to do? You're going to play the DeFi token, the shitcoin game for
Well,
sure.
and here's the thing is, to a lot of people entering the market, they don't understand the difference really between
Mm-hmm.
other cryptocurrencies and Bitcoin.
Mm-hmm.
So I would say that a lot of it is just like just not telling the difference, not differentiating. So I think the value of Bitcoin and a quality asset is something that kind of builds over time. You just see it. So um, there's a learning curve for sure.
Yeah. Plus, like, there's the reflexivity nature of this industry, where like if everyone else is buying tokens, then everyone else will be buying tokens, right? Like, well, now you're buying like XYZ token, so I'll buy XYZ token. Like, it's just like a risk on time of the cryptocurrency industry, and like risk
And this
on
is
is
a
not Bitcoin. This is the
well,
time where Bitcoin gets outperformed.
I mean, yeah, sure. Yes. Uh, is also a very risk on time in the world, period. Again, we're talking about the glorification of trading, the
Mm-hmm.
gains and volatility in all equity markets. So we're just all risk on right now. And
Yep.
yeah, I mean, there's a lot of appeal to tokens, and Bitcoin maximalism is kind of counterintuitive, right? It's
Mm-hmm.
very counterintuitive to someone who's not like into Bitcoin, because the world is all about, in the fiat realm, is all about diversification and
Mm-hmm.
spreading your bets and getting into working capital and all this stuff, right? And then
Mm-hmm.
Bitcoin is just like, no,
Mm-hmm.
hard
Yeah.
money. That's it.
Right.
21 million. like no diversification. So it's just like that is a very different mental model, I think, from what most people have.
Yeah, that is, there is an interesting like juxtaposition behind like Bitcoiner culture, which is like generally a, you know, conservative, responsible, like non-apey uh, uh, group of people. Yet Bitcoin itself is branded as like this highly speculative asset that's super volatile. That like if you come into cryptocurrencies, like you're risking it all. But like Bitcoiners are like the most non-riskiest of people. They're the most non-riskiest of the whole entire industry, right? They're taking the least risky asset with the least volatile price movements out of this whole industry. And so like there's a complete flip where like the Bitcoiners are kind of like the risk off people, right? Because that's what
Definitely.
Bitcoin is. Except Bitcoin is like the risk off asset, and the irony of it is that whenever it goes up in price, it creates a risk on environment. That's an interesting tension to think about.
Yeah, I mean, I just think that right now it's a mental model shift that the world is having, and that mental model shift that's the adoption curve, right? Is the mental model shift between the fiat realm and then the 21 million realm. So yeah, the Bitcoiners already know that Bitcoin is the safest asset in the world. No one else gets that yet. That's why they're
Yeah.
confusing it with other cryptocurrencies, which are a lot more speculative and a lot more volatile. And
Mm-hmm.
I mean, that's why I think that there's probably a pretty big divide between people who are interested in Ethereum and tokens and people who are like long-term interested in Bitcoin, because they do offer very different things.
Right. Yeah. And I would say that that's a concept that I don't think very many Ethereans understand. I mean, if we talked about like the risk off nature of Bitcoin, they would probably throw a number of flags with that. Like they would perhaps say, well, that's just like another narrative regard that's perhaps not not actually brought up in reality. I don't really know if that's worth going into, but they would say either disagree with it or perhaps misinterpret or misunderstand it.
Yeah, I mean, I don't know if this is the right time to talk about cognitive dissonance, but I think both Bitcoiners and Ethereans have a lot of cognitive dissonance for each other and the different
Mhm.
like realms that the technology fill.
Yeah, it's like I've always not enjoyed like people's criticisms of other people when they say like, "Oh, like that's your bag bias, like you're just speaking your bags," because like why would you buy your bags against any other like belief system that you don't have? Like are you supposed to be buying assets that you don't have those beliefs in? Because like how are you supposed to like pitch the value proposition of your asset without being able to like quote unquote speak your bags? Like that's why you own it in the first place. It's because you can talk about it. But at the same time, there is 100%. Well, there's even like maliciousness where like people get a bunch of like discounted tokens or just like, you know, shit that they didn't actually work for, and there's incentive to like pump something. But other than that, it's just like some people just identify with certain, like I would say Ethereans, like so, like somebody like Antipro, he would say that like Ethereum or Ether is actually the world's most risk off asset because like Ethereum 2.0 is the world's most sustainable like blockchain, and it's supposed to be like infinitely like persistent. So there, like I said, there will still be debates, but yeah, generally the camps seem to be have drawn a line between them.
Well, I mean, I would say that people like Anti believe that Ethereum has all of Bitcoin's properties and then more. And I would say that
I would agree
that
with this.
that's that's pretty far from the truth. Really, they have very different properties, and you can see that in like in the instantiation of the people who are using the assets. So like I don't think that there's a lot of people who are involved in the Ethereum community that have the exact same belief structure as Anti about Ethereum. But every single person in the Bitcoin ecosystem has the exact same idea of Bitcoin as this incredibly safe haven. Like
Mm-hmm.
safety and sats is a mantra that is a thing in the Bitcoin community.
Right.
So like let's talk about which one actually kind of has those properties like really freaking shining through. I think it's pretty clear.
Yeah, I think it all just boils down to like how well do you accept that like there's two main characteristic differences. Bitcoin is a finished project, and all it has to do is continue, right? More or less. And then Ethereum, and do you value that? And do you value how quickly that thing became finished and perpetuating and totally like outside of the hands of humans? Like, and
I mean,
that is something that is like really.
I feel like that's a slightly flawed narrative, though.
What do you mean?
So, like, what part are you specifically pointing to as like finished?
Yeah, let me clarify. Bitcoin is like, it's a Pandora's box that was opened and now it's in the world and there's no stopping it. Like Ethereum has a bunch of developers that it needs to take action to happen for Ethereum to continue. Like if all development around Ethereum like stopped, like the thing would probably fall apart at some point in time. Therefore, human interaction needs to come and patch those holes until we can get it to the point where it's also similar to Bitcoin, where the Pandora's box was open and now it's just here and something that we have to live with because it perpetuates into the future. Safety and stats is talking about how Bitcoin is like, it's something that's unleashed upon the world and now it's here and there's no getting rid of it. Ethereum is not yet there, but whether you're a Bitcoiner or an Ethereum is, in my mind, determined on like, are you captured by the Bitcoin narrative where like it's already out in the world and it's going to be that way forever, so you might as well buy some now? Or do you want to follow the path that some people are taking with like what happens when we research and do research and development as to how to best improve the thing that comes out of the Pandora's box? When we do open Pandora's box, it'll be the most like gargantuan, cool, fucking awesome thing. Like when that does happen, what will come out of that box? That's Ethereum. And it's whether you fall on those two lines of the sand or not, I think is how you end up being in a Bitcoin or Ethereum.
I mean, I would say your characterization of like the differences is probably pretty accurate there. I would push back and I would say that there would probably be a lot of Bitcoin developers that would push back and say like, no, dude, if we stopped building on Bitcoin, like shit would break. Like we have to keep perpetuating this thing and sharpening the spear. Really, like the way I kind of like to think about it is like okay, Bitcoin is the spear and these developers are sharpening the tip, making it better at being a spear. Whereas Ethereum is like, this thing is a weapon and they're literally adding more things onto, like they're making it different. They're like taking pieces off of it and plugging new pieces into it. It's kind of like what you discuss is like it's like, hey, the paper press is out and now the concept of the paper press or the printing press is out. That's like what Bitcoin is. Whereas like Ethereum is like legitimately like they're researching how to make the finest of whatever, and it's not like necessarily the concept or the idea of like this thing. Like I don't know, I don't know if I'm even doing a better job of like adding to what you're saying, but I would generally agree with your distinction.
Yeah. Yeah.
But Bitcoin development is constantly happening. It's not like it's like this thing that's like just
of a different kind though, right?
Yeah, I mean, and to be honest, like the ability for developers to impact the protocol is very, very limited compared to Ethereum. And I would say there's very much a bull case that Bitcoiners would express that comes from that.
I would say, like, to go on your spear analogy, instead of where Bitcoiners are sharpening the spear, Ethereum is like researching, like, but instead of even building a spear, Ethereum is researching like, all right, how do we have like, carbon fiber technology with like triple folded steel to be extra penetrative? Like they're doing their R, they're unlocking the tech tree in order to build the best tree. They're not even bothered actually building the thing yet. That's how I would clarify that.
So
metaphor.
Okay, so speaking of like cognitive dissonance and like this specific debate, like what we just kind of illustrated of the differences, what would you say about like Lynn Alden's take that Bitcoin is a finished product and that Ethereum is an experiment? Because I saw a lot of pushback against that specific thing, kind of in the Twitter dialogue.
Yeah, so I in the open reply that we published out of Bankless, I did a pretty decent job saying that, like, if Lynn Alden thinks that Ethereum is like this unfinished project that still has a bunch of development to do that maybe will be suitable in the macro conversation in the future, but it isn't yet today, I'm like, sure, okay, fine. There were other components about her piece that were straight up wrong, like, and just a mischaracterization, but they were different from her criticisms of like Ethereum is just an unfinished project that's too small for the macro environment, which I totally agree agree about. That makes so much sense. Like we're still developing it. We're still rolling out proof of stake. We're still rolling out sharding, blah, 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 blah. Like we're only $160 billion market cap. And so by the time, if Lynn is ready as a macro investor to sit on her hands and wait for these things to roll out and wait for the market cap of Ether to go from a non-macro asset into a macro asset, like $160 billion into $1 trillion asset, sure, she can wait and wait for Ethereum to be done when it's got a higher market cap, and then she can consider it in her macro perspective then. But that's just a different, like, what do you want to purchase as an asset? Do you want to purchase the pre-finished $160 billion token worth of Ether? Or do you want to finish the finished version of Ethereum that's got the $1 trillion market cap? Like Lynn Alden's saying, she's preferring the one with the $1 trillion market cap versus the one with the $160 billion market cap. And we all know in this space that like sometimes when the price of an asset goes up, it makes it even more of an attractive asset to purchase.
Well, that's absolutely true for Bitcoin. But I don't know. See, this is where like then you get into the debate of where is Bitcoin going to be and like what happens with the network effects, right?
Mm-hmm.
And does Ethereum and Bitcoin's network effects like live together? Do they work together, or do they ultimately kind of start to compete? We've seen with other like monies that they, gold and silver aren't friends. Like gold kick the shit out of silver. Like gold going up is bad for silver in the long run. So
I don't think we'll see that part of Bitcoin and Ethereum for like 50 years.
Maybe, yeah. But but the internet rolled out way faster than that.
Okay, like, sure. 30 years, 25 years.
But Bitcoin and Ethereum are built on top of an internet infrastructure that already exists. Like I'm saying by the end of the 20s, like we're in a Bitcoin world now.
You think the victor between Bitcoin and Ethereum will be decided by the end of the 20s?
Well, I think the victor of how we organize ourselves as a society is going to be decided by the end of the 20s. In the next 10 years, we're reorganizing.
Sure. But what does that mean about Bitcoin versus Ethereum?
It's completely centered around Bitcoin, in my opinion.
So what does that mean? Like the average, like instead of Venmo, when denominating dollars, we're using something else and it's denominated in BTC. Like that's the average transaction between people like you and me by the end of this decade. Yeah. There's no way that is happening. There's no way. 10 years to swap out the dollar.
How? Okay, iPhone happened in 2008. When was it ubiquitous?
I don't know.
I mean, what? Like we graduated college in 2015.
I had a BlackBerry up until sophomore year of college.
Yeah, well, you were a very late adopter then. I got an iPhone in high school.
Yeah. I got my first iPhone 5 junior year of college. Yeah. Mm-hmm.
I mean, but yeah, by the time iPhone 5 was out, like Bomb had iPhone 5. So that's 8 years for mobile. I like my BlackBerry. Okay. That's 8 years for mobile. Okay. So now Bitcoin is built on top of the internet and mobile. Right. Like mobile's already here.
Yeah, but it's also trying to displace it. Like what did the iPhone try and displace? Like not much. Bitcoin is trying to displace the dollar. That's going to go a little bit like slower than the iPhone.
The US is displacing itself too.
Sure.
Hey,
like the dollar again, I think still be the unit, and Bitcoin could still achieve all of your hopes and dreams from a number go up perspective.
Yeah, I'm just really bullish.
Yeah, fair enough. Do you have anything else to talk about?
We didn't talk about specific tokens.
Oh yeah, you want to talk about specific tokens?
Yeah, I mean, like,
what do you? My bags.
Yeah, pump your bags on the show, and if I could just say something about pumping bags, people do talk their book. Like, I agree with you that like you can be interested in your bags, that's authentic, but once you have bags, that influences your brain too.
Yeah. Well, so what would you say you've been doing with your bags, your BTC bags on this podcast? Like, are you pumping your bags right now? Because you've been like saying, well, I don't know about all of these other assets, but I do know about Bitcoin.
I pump my BTC bags and none of my other bags.
That's fair.
I'm pretty consistent on that.
Mm-hmm. I do want the DPI token, the DPI DeFi Pulse Index token, to like be shield harder because it's of the credible neutrality, and I still think it'll get a pretty decent amount of DeFi exposure. It won't get the micro caps, and sometimes the micro caps are like where like all the action is. But like it's still got some pretty good stuff in there, like Aave and YFI and Uni, and those are my bags. And so if you buy the DeFi Pulse Index, you're buying my bags by proxy. But yeah, that's kind of where my head's at. Is like when anyone ever is going to ask me about like what should I do in DeFi, I'm just gonna say like DPI, just do the DPI.
So just blue chip shitcoins.
Yep. And like that'll scratch their itch for like DeFi exposure, yet they won't like go like full degen like lunacy into shitcoins.
So, I mean, if someone wanted to go full degen lunacy, like how does one even navigate that?
So one of the things I've been considering with my bags lately is to the point where we're at the point in the market where tokens that have historically like shown that they got what it takes will be the tokens that continue to show that for like the next 6 months. So like that narrative is therefore extremely bullish, like Link, for example, which is pushing up against all-time highs. And I think both Aave and SNX fall into that category. Like tokens that have shown that number goes up, I think are the most fundamental tokens to put in your portfolio because they've shown number to go up. And so they're going to continue to go up because that's what they've done. I think that's the most sound investment analysis I can think of. And so by
pure reflexivity.
Yeah, pure reflexivity. That's exactly right. So like that counts out tokens like YFI actually, and tokens like MKR, which have gotten kind of like these YFI got it twice, 1 or 2 big pumps, but like there are now like bag holders of YFI, right? This thing is kind of stale. And MKR has been flat for 3 years before it went from 500 to 1500 in like 3 days. But like that could be it. Like, and so that token has not shown what it's got. And so like Link, Aave, SNX, I think have shown that they've got what it takes for number to go up, and therefore number shall continue to go up.
Well, so you're making kind of 2 distinctions, and I'm going to show the most recent Bitcoin Tina on Bitcoin podcast that I put out with Bitcoin Tina. Go check that out. The hardest trade. We talk about 2 scenarios, right? So we talk about 3 scenarios. And in the macrocosm for Bitcoin, we talk about the cycle, which David has talked about a lot here and we have referred about. But we also talked about what happens if the cycle breaks this time and Bitcoin just goes straight up and to the right every single year. We also talked about what we would consider to be the hardest trade, which is what if Bitcoin reprices and then it's just flat? So that repricing and then flat, that sounds like MKR and Wi-Fi. The reprice and then flat, and then you just got to hold that chop. Like that is so hard and painful. But when it reprices, it's fucking awesome. And right. I feel like when like Wi-Fi, it repriced pretty much 0 to like 20K. Like there was a pretty fat dip there, but in dollar terms, it repriced. And it really just went flat from there.
That's kind of how I use this as a metaphor to explain bull markets. Like the 3 years that's not a bull market, like the whole world has forgotten about crypto. And then like 4 years later, the investing class of the world is like, oh yeah, there's that whole crypto thing. Let me turn my attention to the cryptocurrency industry. Oh, there's something going on here. Oh, this asset class is undervalued. They start throwing money in there. And then that momentum of people like turning their attention to the cryptocurrency and investing in it sends it through the roof. And then it goes up and then it crashes. And then people forget about it for 3 more years because all people can take is just a little bit of crypto. Like, 6 to 9 months of crypto every 4 years is more than enough for most
6
people.
to 9 months of shitcoining.
Yeah, sure. But like, and then like people forget about it for 4 years, right? Prices like bleed out for like 4 years. And then people start to think about, for some reason, they start to think about crypto again. It's like, oh, they look at the last 3 to 4 years of development and they say, oh, this asset class is undervalued. And like throw a bunch more money in it. And then we get another bull market and then the cycle repeats, right? And so like, this is just every 4 years, what a bull market is a great repricing. It's a great repricing of the industry. right? The question I think that you guys are asking on the hardest trade with Bitcoin Tina, which I actually fell asleep to listening to last night. It was very cute. Is that what happens if the world doesn't forget about crypto this time? What happens if crypto actually comes into the mainstream attention and then doesn't leave? Like, what happens if people open up an app on their phone every single day and it's a crypto app? Like, what, at some point the world isn't going to forget about crypto. And when is that going to happen? And I think it's totally reasonable to think that, at least especially with Bitcoin, the world could not forget about Bitcoin now forever, right? I think that could be a pretty justifiable argument to make.
I mean, the macro narrative has completely changed. Like, I think Bitcoin today is in like the general person's perspective, is potentially a legitimate asset. Whereas like before 2020, it was, for a majority of people, other than people who actually dove deep, it was not a legitimate asset. Wait, let's talk about proof of work versus proof of stake and
Okay, sure.
energy cognitive dissonance.
Right. Yeah. Okay. So there's a lot of, like we were saying earlier, there's a lot of cognitive dissonance about people not wanting to buy Bitcoin. And we saw this, I think there was like that FUD news cycle where there was like a quote unquote double spend. And then there was like a bunch of other just FUD about Tether that, like, you know, and people like you and I have already dealt with, that we knew is just a bunch of FUD. But like, something that I expect to happen is that a bunch of people will come into the space and like not purchase BTC on the premise that it's like a dirty non-green asset, right? And so they'll buy proof of stake assets as a result of that, because they don't want to help contribute to the energy. And I actually do think that this is like a viable like investment thesis. Like, if you think the nation state or just people are just going to come on down on Bitcoin because of its mining surface area, I think that could be a rational thing to think that, you know, Bitcoin will have extra friction as a result of its proof of workness. I could see that happening.
Yeah, I mean, I could see the FUD happening. I just don't know how effective the FUD is going to be as like an investment, like to invest again or invest in, right? And like, why are you investing in the anticipation of FUD versus in fundamentals?
Sure. Yeah.
And I mean, this is something I believe in, and I think that the data shows this, and I think that the trends show this. But Bitcoin and proof of work in particular helps unlock and helps monetize stranded energy. Like this is a second Pandora's box that is just being opened right now and just being investigated right now, and it's huge. It's absolutely huge. So
it's one of
I
those
think
things that, like, it's a tough pill to swallow.
it.
It's
I mean,
tough.
but
Go ahead.
I mean, the like there is utility in proof of work. Like energy facilities that create energy are significantly more profitable if they can sell all of their energy all of the time.
Right.
They also they work
I mean,
a lot
you don't
better
need to
that
explain
way.
it to me. I believe it 100%
Yeah.
of the way.
I'm not trying to explain it to you. I'm trying to
Yeah.
explain it to the people on this call who don't believe it. So when people can't consume all of the energy that is being produced all of the time, those energy facilities either throw away the energy or they turn off and then lose money because of that. So that's either seasonally they turn it off or they actually just shut down like on a daily. So what Bitcoin enables is you can either sell it to the grid, and when you're not selling it to the grid, you can always sell it to Bitcoin. Like that's what this energy arbitrage that Bitcoin opens up. And that is worth way too much money. That creates so much efficiencies that you can't ignore it. Like the FUD is a lie. So how long do you believe the world can operate on a lie? I don't know.
Well, I think this would fit into big Bitcoiner thinking, because like there's this is ought gap between what Bitcoin is and what Bitcoiners say it is, right? And because there's extrapolation out into the future. It's a very young industry. We have to extrapolate out into the future. Right now, Bitcoin is not clean. Like, it's not a clean thing. It has perhaps clean and green tailwinds. And according to the Bitcoiner narrative around waste and energy and consumption with proof of work, it would play out in the long-term benefit of the human race. because of just the perpetual forces backing it. But that's in the future. And then there's right now, and right now, Bitcoin, there is coal mined Bitcoin
So
powered
okay, so
farms.
let's
There are dirty
so
Bitcoin mines, and there's
let's
this
just
is
talk real
op
quick.
gap that we have to actually get there.
So let's just talk real quick. How much energy is wasted with our current system? How much energy is wasted with our current inefficient energy infrastructure, with our current inefficient practices of turning on and off? How much
Sure.
of our ecosystem are we destroying doing that?
How
So
long do you think
why
that
are
you're
we
going
trying
to
to
have to explain
perpetuate
that to
that?
people?
But
That's
no,
a good point.
but
That's a good
people
point.
already know that it's bad. People already know it's bad. How, like, what if you say we can't have a better system, we can't use Bitcoin to improve, what you are inversely perpetuating the other system. Like, Bitcoin enables solar energy to happen. It enables wind energy to happen because it provides that consistent energy needs that are needed to justify building it in the first place without subsidies. Like,
Right.
what essentially what these greenies are saying is, hey, don't do the Bitcoin thing. Let's do the energy
Greenies.
infrastructure without like a market incentive. And like, let's just force people to do it through, education. Like, I'm sorry. Like, you're just not going to educate your way to this. You're not going to, like,
Yeah.
people are going to do what's economically viable and what makes sense. And Bitcoin aligns incentives there. And like, the is ought, I'm just saying, like, here's a huge problem. Bitcoin is solving it. So the FUD that it's not green is like, it's rubbing up against friction. It's like rubbing up against the reality that's proving that that's actually not, that it's not the case, and that Bitcoin is moving away from this blackness. So, okay, whatever. Bitcoin is using bad energy right now because our energy infrastructure is bad right now. Okay, well, Bitcoin's also the incentive to fix it. So, I mean, if you're arguing, hey, Bitcoin is just bad right now, like, how do we fix our energy infrastructure? Like, how do we improve that without either sticking guns to people's head and saying, stop driving those cars, stop building those kind of cars, you have to do it this way, or you can get them to opt in. I think Bitcoin is a way better way to do it. Like, I'm just saying, let's do that with an opt-in system that aligns incentives rather than saying, hey, let's do it with force, do it with government.
I think that makes sense. I just don't think that people are going to be convinced by that argument until there's actually just real world evidence. Like, we need more green, quote unquote, Bitcoin mining facilities. You just need to be actual to be able to point to something out in the real world rather than like provide the narrative or the thesis. Because I think right now the position that you and Bitcoiners are in when they try and defend against this proof of work FUD with these, I think, decently well-reasoned arguments that extrapolate out into the future, you kind of are positioned in the same way that like Ethereum people who had to be convinced that like, yes, we are going to actually deliver Ethereum 2.0. You so many people, I feel like that's that same position, because like no one's going to give a fuck about what you're saying until like
the
it's
wall
actually
of worry.
here. The wall of worry.
That's a reference, like, prices climb a wall of worry, but like, there's always a wall of worry between here and like the future trajectory of things.
Maybe I was more talking about how like the people that you're arguing against, the Bitcoin industry is arguing against with respect to this energy thing, they're not going to convince any like these people that are on the other side of the argument until they have like real world evidence. They're just gonna, it has to actually manifest itself away as a problem.
Yeah. So here's the thing: is the people we're trying to argue against, they're not doing their own research, so they're not going to change their mind until it's economically hurting them, which is what Bitcoin's going to do to them. So that's what I'm saying is, like, I don't think it's an investable thesis to say I'm just going to invest on FUD and invest on like continuing to perpetuate FUD. Right. So I mean, maybe that's an investable thesis, but I just don't think that's an investable thesis.
Sure, I agree.
I mean, I'm just slamming my head against that wall, but I mean, like, do you think that I don't think that you think that the environmental potential negative environmental impacts of Bitcoin mining is a reason to go for proof of stake. I think you have a lot of other reasons why you like proof of stake. And I just think that investing against proof of work is that's like investing with FUD. It's like investing is like, hey, here's FUD. I'm going to invest on the premise that the FUD is going to continue. Yes. I just don't think that it's a legitimate investable thesis for proof of stake, in my opinion.
Yeah, I think the energy conversation around Bitcoin is like the to me the buck stops at like there's nothing to say that Bitcoin doesn't deserve that energy. Like it could be an extremely valuable institution and it deserves to be able to consume that much energy. It was that if there's a I think the way like some Ethereans would argue is that like, well, if we can do Bitcoin but without the energy, then we should, right? Like we have the ability to like quote unquote do Bitcoin like stuff without energy. And maybe that's true, but like I still don't think it's worth like rug pulling the right from Bitcoin to be able to exist in the first place, regardless of the energy, because it's people are contributing. It's individuals, people's choice to add that to the system.
Well,
And again,
I would
like
say
we know.
I would say that those Ethereans, you should outcompete Bitcoin though.
Yeah,
Like
I
you
would agree
literally
with that.
have to make something to outcompete
Right.
Bitcoin if you want to, do it better without the proof of work.
Yeah, I would say anyone who's been in the crypto industry for longer than just a couple years who's still bringing up the the proof of work FUD against Bitcoin is doing it with their bags, because like it's just another way to like hammer on Bitcoin. It's like yes, but yes, proof of work is consumptive. Like okay, but at
So
least we have Bitcoin.
yeah, yes, I mean, again, I think that it unlocks potential. I think it's a huge plus. But let's talk about like your arguments for proof of stake that are like outside of the belief that Bitcoin just uses a bunch of energy.
Oh yeah, sure. So in the same way that like Bitcoin is the last buyer of energy, Ethereum is something similar to with like capital and proof of stake, right? Whatever you want to do with with your capital, you can at least always put it into proof of stake. And maybe that's not the best comparison, but like, what was Nick Wall's argument? The thing about like proof of stake is that it inherently like rewards bullishness, right? So if you have Ether, it rewards the most bullish ETH holders most of all, right? So like the amount of reward that you get is proportional to how bullish ETH you are. And so like what do ETH bulls want the most other than more Ether, right? And so it doesn't matter how like if you're just a little bit or a lot bullish on Ether, the most bullish people will always put in Ether into proof of stake because they are rewarded with Ether. And these people are the people that are intrinsically holders. They don't want to sell, they want to hold because that's who they are. They're holders, they're ETH holding stakers. And so the ETH that they're getting from this proof of stake system isn't leaving their pockets because they're holders, because that's who they are. And so that's just inherently bullish because there's extremely low inflation for the narrative, right? Like in proof of stake Ethereum, there's less than 1% issuance. And then there's even less than that after we start deleting some with EIP 1559. So there's basically no new flows of Ether into the free flow, right? And so that's inherently a bullish phenomenon.
Yeah, I mean, I think like I could pick about a bunch of things that I think make that not very competitive for money, but that doesn't necessarily make it not bullish.
Sure. Yeah. So like Bitcoin miners, they got to sell Bitcoin, right? They are net sellers of Bitcoin because they got to
POW
pay their
is a
bills.
coin distribution system. POS
Right.
is not.
Exactly. And that's bullish. That's just bullish. It's
Or
actually a coin sucking system. It's the
yeah,
opposite of
but I feel like that doesn't make like that makes it less competitive for money, as well as EIP
what
1559.
what's the argument there? Because it's not neutral or not fair.
Well, the fair distribution of money is really freaking important, and like making sure it's
I would agree
dispersed
with
as
this.
well as easily, kind of capturable and
Mm-hmm.
I guess in some way fairly, creatable. Um,
Mm-hmm.
I,
So
that that's
Vitalik has a
that's
counter
important.
argument to this. Vitalik has a blog post about his concern because this is one of his big concerns about proof of stake is that, well, it actually doesn't spread out the capital. It actually just kind of centralizes it. And his rationale for why this was okay is that the compounding rewards to proof of stake are so slow in ETH terms that if you ever want to be able to cash in on your Ether and actually like live a luxurious life because of the Ether that you have compounding, you actually have to sell more than you can compound, because specifically that interest rate is somewhere between like 2 to 6% for ETH in ETH terms at maturity. Like people are going to be selling over the length of their lives, are going to be selling more than they are going to be accumulating, right? And so that he thinks that the returns on capital are so low that you actually don't get that centralization of assets. That was his counter argument. I find it relatively compelling.
I don't know. Like, again, like in terms of like that thesis for Ethereum as money, like, okay, and then like, is money only, like, can you break money into different parts? Can like money just be a store of value? Like, I think there's a lot of examples of stores of value that aren't money. So not to say that if Ethereum is not money, or it's not the thing that we denominate the world and doesn't capture that market, that ETH can't be a store of value, that proof of stake ETH can't be a bullish investment. I'm just kind of, in terms of like money, you want it to be very, very fairly distributed and like the least centralized as possible. In terms of like EIP 1559, the destruction of money, that changes the stock to flow in a negative direction. So it destroys stock while flow is kind of consistent. So like if you look at copper, silver, lesser metals from a monetary perspective to gold, they all have lower stock to flows than gold. They all have less stock, like essentially preventing the flow. And then, and I guess, theoretically theoretically, in this perfect world, Ethereum is always, deflating in the amount of currency out there. But that's not set in stone. That's just theoretically if all the game theory works out.
Well, there should be some equilibrium between the issuance and the deletion, so that one should never meaningfully outstrip the other over the long term.
Yeah, and I guess, and I just don't know. Like, these are just kind of criticisms I've brought out that, like, just it makes it either questionable or less good of a money from like a monetary perspective than Bitcoin.
I think
so. That's kind of why I'm just pushing back there.
I think we should strike the word money from all conversation, and we should never, ever use the word money again, because money is such a subjective term that when you say, well, I don't think it's money, like you could mean something totally different than like almost anyone else that's using the term money. Money is pretty undefined. And so I think if we should instead just talk about
money is the universal value measuring system. Money is like something that is money is the riskless asset.
Okay. I need to think about this more. But what I would meant to say is that when people say like, oh, ETH is money or BTC is money, when it's trying to be the thing that it is, it kind of manifests itself differently with every sort of medium. Like the US dollar is also money. Rye stones are also money. All these monies are different. And I think when
the US dollar is the most money thing.
When people say like, oh, like ETH is money, what they're really intentionally saying is like, oh, I'm on team ETH, or saying like, oh, BTC is money. They're saying like, oh, I'm on team BTC. I don't find money to be an inherently like dependable word semantically to be able to debate about.
Yeah, no. So I think that this is like Ethereans throw around the word money loosely and Bitcoiners mean it very expressly, which is why, yeah, with intent.
Okay, well, let's get the Bitcoiner definition of money, and then let's wrap this up.
I mean, it's divisibility, identifiability / verifiability, salability across time and space. And then, they would say that the ability to protect you against inflation is a extremely competitive aspect of it. And they would argue that from a unit of account perspective, as well as protecting you against inflation, 21 million is the perfect. So, I mean, that's the Bitcoin definition, express definition of money. I mean, I'm sure that Ethereans would say Bitcoin's not sustainable. Inflation will have to be implemented. That's a theory in my perspective. But ultimately, like, that's why they would say Bitcoin is the best money. And that's our definition for money. It's a very clear thing. And they would say that money is absolute, something that has dominant network effects. Like, okay, hey, there's all these fiat currencies, but if you look at contracts that are denominated, it's like 95% USD. So it's like, yeah, all these fiats exist, but when it comes to like what really matters, it comes to like the commerce that's happening across the globe, 95% USD.
Mm-hmm. Mm-hmm. I think that explanation for Bitcoin also fits the whole Bitcoin is gold 2.0 narrative, because like all of gold's strengths are what that was to me, but also just it's way better with Bitcoin, right? I feel like that's kind of where the Bitcoin gold 2.0. If you really want to get into like the depths of what that means, it's not just like the new version of gold. It's gold with all of its positive characteristics, but even better. Yeah.
I mean, yeah, that's the gold 2.0 narrative.
Cool. Whether that makes it money or not, I do not know.
So, I mean, what's your definition of okay, Ethereum's virtue signal saying ETH is money. It's saying that means I'm on Team ETH. I think that Ethereum can replace the BTC as the de facto reserve currency of crypto. That's what they mean when they say ETH is money. But like, what do they really like believe in terms of like unit of account, things like that?
I think the whole ETH is money thing, yay Team ETH thing is maybe that's what some cohort of people are doing. What the whole ETH is money thing was really trying to plant a flag on is that Ether is actually valuable, and necessarily so, right? And also DeFi will use it in the same way kind of Bitcoin is used in the legacy world as collateral, right? ETH and the value locked in ETH is valuable and is one of its best characteristics, and therefore ETH is money. It was trying to like slap around it was literally one half of the Ethereum ecosystem trying to slap around the other half of the Ethereum ecosystem, which the other half was like, let's not talk about price, let's not talk about the moneyness of these things, let's just talk about building. And then the other people was like, no, like ETH is valuable, we need to like make a meme about this to say that. And so the ETH is money meme is born. I don't really like to say ETH is money because I think it's just like overly reductive. In my article, ETH a triple point asset, I talked about how ETH is a new model for money. Like it's going to reinvent what we understand money to be. And whatever it is, it's going to be whatever. I could include Bitcoin in this. Bitcoin is a money and Ether is a money. And these are kind of the coolest, newest monies on the block. There are two monies.
Yeah, I mean,
because if you want to do anything on Ethereum, you can't get away from Ether. You have to use it every step of the way, every single time. So like if Ethereum actually does come to be the economy in the same way Bitcoin wants to become gold 2.0 and also the unit of account, everyone's going to need to put Ether on their balance sheet.
Yeah. I mean, I just don't know if Ether is going to become the economy or how finance is going to play into the future. But that is for another POV crypto podcast. This was a very wide ranging one. It was almost like two podcasts just because we had the breakup where your internet cut out.
Mm-hmm. Yes, indeed. Should I wrap this up?
Yep, that's the wrap up.
Cool. All right, you guys, you can follow the podcast at POV CryptoPod. You can follow me at Trustless State, both on Twitter and on Bankless. Christian?
You guys can follow me at CK_snarks. Peace.
Peace.